Imagine you are enjoying your retirement, but then an unexpected medical bill arrives, causing financial stress. You know you have savings in your retirement accounts, but you are not yet 59 and a half years old. This leads to a critical question. Can you access those funds without penalty to cover significant healthcare costs? Generally, yes. Early retirement withdrawals for qualified medical expenses can indeed be penalty-free. The Internal Revenue Service, or IRS, allows for certain exceptions to the 10% additional tax usually applied to withdrawals before age 59 and a half, specifically for medical reasons. This exception is rooted in tax law designed to provide relief for significant healthcare burdens, acknowledging that medical emergencies can happen at any age. For an individual retirement arrangement, or IRA, distributions are considered penalty-free if the amount withdrawn does not exceed your unreimbursed qualified medical expenses for the year. These expenses must be more than 7.5% of your adjusted gross income, or a GI, which is a key threshold the IRS uses to define substantial medical costs. While the direct 10% penalty might be waived for IRA withdrawals meeting these criteria, it is important to remember that the amount withdrawn is still considered taxable income. To utilize this provision, you will need to meticulously track all your medical expenses and ensure they meet the IRS definition of qualified expenses, which typically include payments for the diagnosis, cure, mitigation, treatment, or prevention of disease, and for treatments affecting any structure or function of the body. You should keep all receipts and records, as you will need to report these details when filing your taxes. Remember, this exception applies to the additional 10% penalty, but the withdrawals remains subject to your ordinary income tax rate. A lesser-known detail is that this medical expense exception is more straightforward for IRA plans. For employer-sponsored plans like a 401(k), you typically must separate from service with that employer for the penalty exception to apply to your medical expenses, or roll the funds over into an IRA first. Also, this provision specifically targets unreimbursed costs, meaning expenses not covered by your health insurance or other programs. Understanding these nuances can significantly impact your financial decision-making during a health crisis. By understanding the specific rules for penalty-free early withdrawals for medical expenses, you gain a vital tool for managing unforeseen healthcare costs. It provides peace of mind knowing that your retirement savings can serve as a safety net in an emergency without incurring extra penalties, allowing you to focus on your health rather than worrying about additional taxes.